Picture this. You've just withdrawn your entire life savings from your American bank account. You're standing at the airport with a one-way ticket to a cheap paradise you found on a digital nomad forum. The cost of living is a fraction of what you're paying now. You're finally going to make your money last. You're finally going to be free. Fast forward 6 months. You're staring at a bank screen that shows your balance, but you can't withdraw a single dollar. Or your rent just doubled overnight in real currency terms. Or you're stuck choosing between buying groceries and paying armed guards to protect your home. You're leaving America to save your money, but moving to these 10 countries is like jumping out of the frying pan and into the fire. These places aren't just bad. They are wealth traps that will lock your savings away forever. And the worst part? Thousands of expats are walking straight into these traps right now, lured by misleading cost of living indexes and Instagram posts that don't show you what happens after the honeymoon phase ends. Today, I'm going to show you the 10 countries that look cheap on paper, but will absolutely destroy your financial future. Some will freeze your money, others will inflate it into worthlessness. And a few will nickel and dime you with hidden costs that make Manhattan look affordable. Let's start with the most terrifying category of all. Group 1, the banking black holes. Money you can't access. Here's a nightmare scenario most people never consider. What if the country you moved to simply decided you can't have your money anymore? Not because you did anything wrong, but because the entire banking system collapsed and your savings became a number on a screen you can literally never touch again. This isn't a hypothetical. This is happening right now in multiple countries. And if you're not careful, you could be next. Country number 1, Lebanon, the ultimate cautionary tale. Lebanon used to be called the Switzerland of the Middle East. Beautiful Mediterranean coastline, vibrant culture, and a banking sector that was once the envy of the region. Expats and retirees flocked there for the low cost of living and the cosmopolitan lifestyle. Then 2019 happened. The Lebanese banking system didn't just have a bad quarter, it completely collapsed. And here's what that actually means for real people. If you had money in a Lebanese bank, it's gone. Not in the sense that it disappeared, but in the sense that you cannot access it. Banks impose what they call capital controls. That's a fancy term for we're keeping your money and there's nothing you can do about it. People who had their entire retirement savings in Lebanese banks found themselves with daily withdrawal limits of $100 or less. Some people couldn't withdraw anything at all for months. Imagine this, you moved to Lebanon 5 years ago with $300,000 in savings. You put it in a local bank because the interest rates were incredible. You bought a beautiful apartment in Beirut. Life was good. Then overnight, that $300,000 became a number on a statement you receive in the mail, but you can't actually use it to buy food, pay rent, or leave the country. Your life savings became a museum exhibit. You can look at it, but you can't touch it, and it gets worse. The Lebanese pound, which was pegged to the dollar for decades, collapsed. The official exchange rate and the real street exchange rate became completely divorced from reality. Even if you could get your money out, it would be worth a fraction of what you put in. This is what a banking black hole looks like. Your wealth doesn't slowly decline. It gets trapped in a system that implodes around it. Country number 2, Zimbabwe, when your currency resets every few years. If Lebanon is the nightmare of frozen accounts, Zimbabwe is the nightmare of money that evaporates while you're holding it. Zimbabwe is infamous for having one of the worst hyperinflation episodes in human history. We're talking about inflation rates in the billions of percent. At one point, they printed a $100 trillion note. That's not a typo. 100 trillion Zimbabwean dollars. And it wasn't enough to buy a loaf of bread. But here's what most people don't realize. It didn't stop. Zimbabwe has reset its currency multiple times since then, and each time, people's savings got wiped out. You cannot plan a retirement if the money in your pocket is worthless by dinner time. Think about what this means practically. You move to Zimbabwe because the cost of living in US dollar terms seems incredibly low. You exchange your dollars for local currency to pay rent, buy food, and live your life. Then, the government announces another currency reform. Suddenly, the money you exchanged last month is no longer valid. You have to exchange it again, and the exchange rate is rigged against you. Or maybe inflation picks up again, and your rent, which was $50 a month, is now $500 a month, then $5,000, and the numbers just keep adding zeros. This isn't theoretical fear-mongering. This is the documented reality of Zimbabwe's economy for the past 2 decades. When people talk about cheap countries, they rarely mention currency stability. But currency stability is everything. Without it, there's no such thing as a cheap country. There's just a country where your wealth slowly, or quickly, disintegrates. Country number 3, Iran. Sanctions, plus 40% inflation equals financial paralysis. Iran is a complex, beautiful country with ancient history and incredibly hospitable people. The cost of living, by official statistics, is extremely low. You could theoretically live like royalty on a modest income. But, as an American, you are financially paralyzed here. US sanctions mean you cannot use American banks, credit cards, or most international payment systems. You're cut off from your own financial infrastructure, and Iran's domestic economy is being crushed by approximately 40% annual inflation. Here's what that combination creates. You can't easily get money into the country, and once it's there, it's losing value at a staggering rate. You're stuck in a bizarre financial limbo where you're simultaneously cut off from the outside world and watching your purchasing power evaporate domestically. Let's say you manage to bring $10,000 in cash with you. That sounds like a lot of money in a cheap country, right? With 40% inflation, in just 2 years, that $10,000 has the purchasing power of about $3,600. By year 3, it's worth roughly $2,160. And if you need to leave, if you have an emergency and need to fly home, you can't just book a ticket with your Visa card. You're trapped in a cash economy with dwindling resources and no easy exit. These 3 countries represent the banking black hole category, places where your money either gets frozen, evaporates through currency collapse, or becomes inaccessible due to sanctions and financial isolation. You might have the wealth on paper, but you can't actually use it to live your life. But at least in these countries, the danger is somewhat obvious. The next group is more insidious because they lure you in with cheap rent, then drain you with invisible costs. Group 2, the instability traps. Cheap rent, high safety tax. This category is particularly dangerous because the initial numbers look amazing. You see rent for $200 a month and think you found paradise. What you don't see is the $4,000 monthly safety tax you'll pay just to survive. Country number 4, Haiti, total societal collapse. Haiti is cheap on paper, impossibly cheap, but it's also impossible in reality. This is a country experiencing total societal collapse. We're not talking about political instability or a rough neighborhood you need to avoid. We're talking about gangs controlling the capital city, the airport periodically shutting down, and basic government services ceasing to function. When people ask, is Haiti cheap? The answer is, it doesn't matter. You can't live there. Even if you found a place to rent for $100 a month, what's the point when you can't safely leave your house? When supply chains are broken and you can't reliably get food, medicine, or fuel. When there's no functioning police force to call if something goes wrong. The cost of living becomes a meaningless statistic when the society itself isn't functioning. You're not living, you're surviving. And survival is expensive, even when rent is cheap. Haiti is the extreme example, but it illustrates an important principle. The advertised cost of living and the real cost of living are often completely different numbers. Country number 5, Nigeria, the hidden costs of safety. Nigeria is a perfect example of death by 1,000 cuts. Lagos, the commercial capital, looks affordable compared to major American cities. Then you start actually living there. You need a generator because power cuts are constant. That's not a minor inconvenience. That's a major monthly expense for fuel and maintenance. You need private security because crime rates are high. That's another expense. You need water filtration or delivery because tap water isn't safe. Another expense. You need to pay informal fees to get things done because bureaucracy without bribes moves at glacial speeds. Another expense. You need a driver because traffic is chaotic and dangerous if you're not familiar with local driving culture. Another expense. Add it all up, and the real cost of living in Nigeria for an expat can actually exceed the cost of living in many American cities. The rent might be cheap, but the infrastructure tax is brutal. And that's assuming everything goes smoothly. Factor in the risk of kidnapping, which is a real and growing problem affecting expats and wealthy Nigerians alike, and you're looking at either massive security costs or massive personal risk. This is what I call the safety tax. In unstable countries, the headline cost of living is a lie. The real number includes everything you need to pay to compensate for the lack of reliable infrastructure and security. Country number 6, Ecuador, the gringo price and kidnapping risk. Ecuador has been popular with expats and retirees for years, particularly in cities like Cuenca. It's dollarized, which eliminates currency risk. The weather is beautiful. The cost of living is genuinely low for basic expenses, but Ecuador has a dark side that's getting worse: the gringo price and escalating security risks. The gringo price is simple. If you look foreign, you pay more. This happens everywhere to some degree, but in Ecuador, it's become systematic. Rent, services, and even groceries can cost significantly more if the seller knows you're a foreigner with dollars to spend. More concerning is the kidnapping risk. Ecuador has seen a dramatic increase in organized crime and violence in recent years, spillover from conflicts in neighboring countries. Express kidnappings, where criminals grab someone, force them to withdraw money from ATMs, and then release them, have become increasingly common. And there's also been a rise in targeted kidnappings of foreigners and wealthy locals for ransom. Peace of mind has a price tag in Ecuador, and that price tag is getting higher every year. You can find cheap rent in a beautiful colonial city, but you'll spend your days looking over your shoulder and your nights behind reinforced doors with security systems. Is it worth it? For some people, maybe. But for most retirees who were promised a peaceful, affordable paradise, the reality is far more stressful than the marketing materials suggested. The instability-trapped countries offer cheap rent but extract payment through stress, security costs, and constant uncertainty. You save on housing but lose in quality of life and actual safety expenses. But at least in these countries you can see the danger. The next group is more subtle. They slowly bleed you dry through inflation you can't escape. Group 3. The inflation hells. Prices change daily. Imagine waking up every morning and checking the exchange rate before you check the weather. Imagine going to the grocery store and seeing prices that have increased since yesterday. Imagine trying to budget when the value of your money is in constant freefall. This is life in the inflation hell countries. They might be beautiful, cultured, and nominally cheap, but they're economic war zones where your wealth is under constant attack. Country number 7, Venezuela, the collapse of a rich country. Venezuela is the cautionary tale of what happens when everything goes wrong at once. This was one of the richest countries in Latin America, massive oil reserves, educated population, modern infrastructure. Then came economic mismanagement on an epic scale, and Venezuela experienced one of the worst economic collapses in modern history. We're talking about inflation rates exceeding 200% in recent years, and that's after it fell from the millions of percent it hit during the worst of the hyperinflation crisis. 200% inflation means that if you have $100 today, in 1 year it will have the purchasing power of about $33. In 2 years, about $11. In 3 years, about $3.60. Your wealth doesn't decline, it evaporates. The Venezuelan government tried everything. They knocked zeros off the currency. They created a cryptocurrency. They tried to peg the currency to oil. Nothing worked. The economy is still in shambles, millions have fled the country, and those who remain face daily struggles to afford basic necessities. Could you retire cheaply in Venezuela? Technically, if you have US dollars coming in regularly, you have tremendous purchasing power. But you're living in a society that has collapsed economically. Shortages are common. Crime is rampant. The infrastructure is crumbling. And your dollars, while valuable, put a target on your back. Venezuela isn't just a bad retirement destination. It's a warning of what happens when economic policy goes catastrophically wrong. And the scary part? Venezuela was rich. It had every advantage, and it still collapsed. If it can happen there, it can happen anywhere. Country number 8, Argentina, the beautiful trap. Argentina breaks your heart because it has everything you could want: world-class wine, incredible steaks, beautiful architecture, passionate culture, stunning natural landscapes from Patagonia to Iguazu Falls, and inflation that will drive you absolutely insane. Argentina has been fighting inflation for decades, and it keeps losing. Recent rates have hit 190% annually. Even in good years, it's been running at 40 to 50%. What this means practically is that you are constantly stressing about exchange rates. The official rate and the black market rate, called the blue dollar, are often wildly different. The government imposes currency controls. The rules change constantly. It becomes a full-time job just to manage your cash. You're not retired and relaxing in Buenos Aires. You're playing amateur currency trader just to preserve your purchasing power. You're trying to figure out whether to exchange your dollars now or wait. You're monitoring WhatsApp groups for the latest blue dollar rates. You're calculating whether the steak dinner you want to buy will cost 20% more next week. This is exhausting, and it never stops. Argentina is the beautiful trap because it seduces you with culture and charm, then grinds you down with economic chaos. Expats come for 6 months, fall in love, and plan to stay forever. Then the inflation hits their budget, the exchange rate chaos becomes unbearable, and they leave frustrated and financially drained. You can live cheaply in Argentina if you're willing to become a full-time money manager. But if you wanted to work full-time managing complex problems, you probably wouldn't have left America in the first place. Country number 9, Turkey. Rent skyrocketing in real terms. Turkey seemed like a dream destination for years. Istanbul straddles Europe and Asia. The food is incredible, the history is rich, the beaches are beautiful, and it was cheap. Then inflation struck hard. Turkey's inflation rate has been running at 50 to 80% in recent years, and while the government publishes official numbers, independent economists say the real rate is even higher. What this created is a perfect storm for expats. Rent is skyrocketing in US dollar terms. Landlords know the Turkish lira is collapsing, so they're increasingly demanding rent in dollars or euros, or they're adjusting prices every few months to match inflation. What was affordable 2 years ago is now comparable to mid-tier American cities. Expats who move to Turkey for the cheap cost of living are being priced out. The value proposition has completely evaporated. They're either paying amounts comparable to what they left behind, or they're moving to cheaper neighborhoods that lack the amenities and safety they were seeking. Turkey also illustrates another problem with inflation. It creates social tension. When people can't afford basic necessities, resentment toward wealthy foreigners grows. You might be living modestly by American standards, but if you're paying rent in dollars while locals struggle with a worthless lira, you become a symbol of inequality. The inflation hell countries are traps because they promise affordability, but deliver constant financial stress. Your money might go far on paper, but the psychological cost of managing volatile currencies and watching prices rise daily is enormous. And then there's one more category. The surprise trap. Beautiful countries with catastrophic gaps. Country number 10, Myanmar and Laos. The infrastructure trap. Myanmar and Laos represent a different kind of trap. These aren't countries with frozen banks or hyperinflation. They're cheap. Genuinely cheap. You can live on very little money. The people are friendly. The culture is rich. The landscapes are beautiful. Until you need a hospital. These countries suffer from what I call the infrastructure trap. Everything is fine until it's not. And when it's not, you're in serious trouble. Myanmar and Laos have limited medical infrastructure outside major cities. If you have a serious medical emergency, a heart attack, a stroke, a severe accident, the local hospital might not be equipped to save your life. Your only option is an emergency medical evacuation to Bangkok or Singapore, and that costs anywhere from $15,000 to $50,000 or more, depending on the severity and the distance. One medical emergency can wipe out years of savings from cheap living. And it's not just medical care. Infrastructure gaps affect everything. Reliable internet might not exist in the area you want to live. Roads might be impassable during rainy season. Banking might be cash only in many places. Legal protections for foreigners might be minimal or non-existent. The cost of living is low because the infrastructure is low. You're not getting a deal. You're getting what you pay for. And here's the really dangerous part. You might live there for years with no problems. You'll think you've beaten the system. You'll congratulate yourself for finding this hidden gem that everyone else missed. Then one day something goes wrong, and you realize why everyone else didn't move there. The surprise trap countries lull you into complacency, then hit you with a catastrophic cost when you least expect it. The solution, where your money is actually safe. I've just shown you 10 countries where you will lose your money. 10 beautiful, affordable, seductive traps that will destroy your financial security and ruin your retirement dreams. But here's the thing. I'm not telling you this to scare you out of moving abroad. I'm telling you this so you make a smart decision instead of a desperate one. Because here's the truth that the digital nomad influencers won't tell you. Cheap is expensive when it costs you your security, your health, or your wealth. The countries I just described aren't bad countries. They're countries with serious structural problems that make them unsuitable for long-term financial security. Some of them might be amazing places to visit. Some of them might even be viable for short-term stays if you go in with your eyes open. But for retirement, for building a life abroad with the savings you worked decades to accumulate, they're disasters waiting to happen. So, what's the alternative? There are countries where your money is not only safe, but where it can actually go further without the catastrophic risks I just outlined. Countries with stable banking systems, reasonable inflation, functioning infrastructure, and legal protections for foreigners. Countries where cheap actually means affordable instead of trap. Countries where you can sleep at night knowing your savings won't evaporate, freeze, or require armed guards to protect. I've ranked these countries for you based on cost of living, safety, healthcare quality, visa accessibility, and long-term financial stability. These are places where Americans can actually retire on Social Security and live well. Not just survive, but genuinely thrive. I've put together a complete guide ranking 10 countries to retire on Social Security from worst to best. This is the safe list. The places where your money works for you instead of against you. You'll find the link in the description and pinned in the comments. It's called 10 countries to retire on Social Security ranked worst to best. If you've made it this far in this video, you're serious about making a smart move. You're not looking for get-rich-quick schemes or fantasy lifestyles that don't exist. You're looking for real information about real places where you can actually build a life. That's exactly what the next video delivers. Don't make the mistake of choosing a country based on outdated blog posts or Instagram influencers who left after 3 months. Do your research, understand the risks, and choose a place where your money and your future are actually secure. Click the link, watch the ranking, make a smart decision. Your retirement depends on it. Thanks for watching, and I'll see you in the next video.